Everything the state says is a lie, and everything it has stolen. Wow, Nietzsche really throws down the gauntlet with that one, doesn't he?
He certainly does. It definitely sets a provocative tone for what we're about to explore.
Welcome, everyone, to the deep dive. You've really shared a fascinating stack of sources with us this time. Top of the list is that April 2023, the Gloom, Boom, and Doom report, complete with all the figures and references.
Yeah, it's quite a document.
So our goal for you listening is to really pull out the most crucial stuff from all this material, the economics, the social commentary, the geopolitics, even that bit on agricultural trading.
Right. We want to help you make sense of it all, hopefully spark some aha moments.
Exactly. Without getting you completely bogged down in every single detail.
Absolutely. And it's interesting because the report, it sort of starts with this worry about socialism rising in America, but then it weaves through all these other like immediate concerns.
Like what are we talking about?
Well, things like, market downturns, what's happening with corporate profits, insider trading signals, consumer debt levels, job losses in small businesses.
Okay, the day-to-day economic news that hits everyone.
Right. And then the SVB failure, which was huge news back then.
Yeah.
But also bigger picture geopolitical things like that Iran-Saudi Arabia agreement brokered by China
A game changer, yeah.
and this sort of perceived decline of Western influence. And then the author circles back to that initial socialist threat idea, even bringing in an essay about alleged communist infiltration in U.S. schools and this piece on agricultural commodities. It's quite a mix.
It really is. Okay, so for you, the listener, we're going to try and connect these dots, see the potential big shifts happening, economic, social, geopolitical, all through the lens of this specific report.
Pinpoint the arguments, look at the evidence presented.
And just try to make it clear, no need for you to wade through hundreds of pages.
Yeah.
Let's dive in. Where should we start? That initial focus on socialism in America.
Yeah, let's start there. The author seems genuinely puzzled, right? How could a nation supposedly founded on freedom and individualism seem to be drifting towards what they call authoritarian socialism and communism so quickly?
It's a big question.
It is. And they bring in Hayek, that powerful idea he had that private property isn't just about the owners. It's like the main guarantee of freedom for everyone because it stops the state getting too much power. Distributed control.
Right, it prevents that concentration of power. And didn't the author also mention Schumpeter
Mm-hmm.
about the market being democratic in its own way?
Exactly. Like our choices as consumers, as participants, that's a form of democracy too. Different from voting, but still powerful individual choice.
Okay, and then there was that lament about the quality of Western leaders
Yeah.
today,
Yeah.
using that pretty brutal Nietzsche quote about socialism being the tyranny of the dumbest.
Yeah, that definitely sets a critical tone that, echoes throughout the report. It's important to see that initial worry about socialism almost as a framework. Well, the author seems to interpret a lot of the subsequent stuff, the economic issues, the geopolitical shifts, as either like symptoms of this shift or things contributing to it.
Okay, that makes sense. So let's get into those daily news distractions then, starting with the economic picture back in April 23.
Right. So the report mentions a tweet market down 15% from its peak. The author sees this as possibly the start of, another leg down, anticipating a recession hitting company sales and profits.
And profits were high then, right? Near record levels, which sounds vulnerable.
It does, intuitively. But here's that really interesting historical point the author flags. Back in the inflationary 1970s, corporate profits and profit margins actually went up.
Huh. Okay, so it's not always a simple cause and effect. Inflation doesn't automatically crush profits.
Apparently not, or at least not always. The report then digs into why profits had expanded so much over the previous decades. Low interest rates, outsourcing, tax cuts, wages not rising super fast.
All those factors.
Yeah. But it also suggests those high margins might be peaking or were peaking back then because the business environment was getting tougher.
And this is where the insider activity comes in, what the execs and big shareholders were doing.
Exactly. The report highlights a real lack of optimistic buying from insiders. Their purchases were way down compared to periods right before previous market slumps.
But they were still selling.
Selling was pretty steady, yeah. But here's the twist. While insiders seemed cautious, companies themselves were announcing record share buybacks. Figure 4 shows this.
Okay, wait. So the people running the companies aren't buying much stock, but the companies are buying back stock like crazy. That seems contradictory.
It does, doesn't it? The report floats a couple of ideas. Maybe companies were trying to hoard cash, anticipating trouble, or maybe they thought taxes on buybacks might go up later, so they were doing it while they could.
Either way, it sounds like a warning sign, a bit of a disconnect.
Definitely suggests some caution was warranted, yeah.
Then the focus shifts to consumers and small businesses, and the picture gets kind of grim, doesn't it?
It really does. The stats mentioned are quite stark. Rising delinquencies, people falling behind on credit cards, car loans, personal loans, levels not seen since like the aftermath of the '08 crisis.
That's worrying. And small businesses.
Significant job losses reported there, which is a big deal because small businesses employ so many people.
So if you connect that back to the corporate profit discussion,
You start to see a potential negative loop, right? Profits get squeezed, companies lay people off, especially maybe smaller ones first, then people have less money to spend, which squeezes profits even more. It hints at maybe a shakier economy than the headline numbers always show.
and then boom, Silicon Valley Bank. That was a huge story.
Massive. The report digs into SVB's focus, which was heavily on these VC-backed startups, tech companies funded by venture capital.
Right, very niche.
Very niche. And the failure had big potential knock-on effects for that whole sector, especially because apparently a huge chunk of the deposits weren't insured, so a real risk of a cash crunch for those startups.
The author uses that circus analogy, too,
Mm-hmm.
pointing out the backgrounds of some SVB leaders.
Yeah, that was pretty pointed. Mentioning the CFO came from Lehman Brothers
Ouch.
and the chief risk officer from Deutsche Bank. Both firms with, let's say, their own troubled histories.
Understatement.
And then there's the observation about the SVB CEO sitting on the San Francisco Fed board while maybe kind of misunderstanding how Fed tightening would impact his own bank. The report calls it arrogance to act, suggests overconfidence might have played a role.
And that accounting loophole,
Yeah,
that sounds crucial, the way they accounted for their bond portfolio.
super crucial. Figure 6 in the report apparently showed this. They could hold bonds on their books at the price they paid, not the current, much lower market price because rates had gone up.
So on paper, their equity looked okay.
Right. But if they had actually marked those bonds to their market value, their equity might have been wiped out. It basically masked huge unrealized losses.
And this wasn't just an SVB problem, you're saying?
Well, the report points to the big drop in the U.S. bank stock index around that time. That's figure 7, suggesting it was a broader vulnerability across the system. Those rising interest rates were hurting bond portfolios everywhere.
Plus, SVB was lending to lots of tech startups that weren't even profitable yet. That adds another layer of risk.
Definitely. It raises questions about the sustainability of that kind of model, so reliant on one volatile sector.
Then the report zooms out a bit, looking at the quality of earnings across the U.S. market. What does that mean?
It's basically looking at whether reported profits are backed up by actual cash flow. And the report found a concerning trend shown in figure 9. Reported earnings were growing way faster than the cash companies were actually generating.
How did that happen?
Things like booking revenue before the cash comes in, or maybe inventory building up faster than sales, making the cost of goods sold look lower on paper than the cash actually spent. The report said it was the biggest gap between earnings and cash flow since 1990.
Okay, so that definitely dampens the enthusiasm for the bull case for stocks back then.
It certainly casts some doubt, yeah. And the report is pretty blunt in blaming government policy, too, calling it systemic risk.
What specifically?
Things like banking rules, they argue, were misguided, the economic impact of COVID shutdowns, and government spending that fueled inflation. The author argues these created the conditions that made SVB so fragile.
Which then leads to the government stepping in after the failure. The Fed's Bank Term Funding Program, the BTFP.
Right. The administration insisted it wasn't a bailout. The report strongly disagrees.
Why?
Well, it argues depositors were bailed out, protected from losses they might otherwise have faced, and that this intervention would likely have consequences, like maybe slowing down the Fed's fight against inflation.
And there was that concern about nationalization.
Yeah, the idea that if the central bank effectively guarantees all deposits, it pushes the system closer to being state-controlled. That's a serious charge.
And Hayek gets quoted again here, right? About planning leading to totalitarianism.
It does. It ties the economic intervention back to that broader ideological concern. The report also predicted the likely fallout. Regional banks pulling back on lending, maybe stricter rules coming down the line.
Although the market itself was already tightening things up.
Right, what they call disintermediation. But the author saw bank stocks breaking below their October 2022 lows, figures 7 and 13, as a really bad sign for the whole market.
And in the comparison with Europe, suggesting things might be even worse over there.
Yeah, potentially. Because Europe had negative interest rates for so long, the report argues their banks might be sitting on even bigger hidden losses on government bonds. Credit Suisse is used as the prime example of that potential instability.
Michael Lewitt's commentary on CS, cited in the report, sounds pretty damning. Years of mismanagement, huge losses.
It reinforces that worry about the European financial system's health. And it leads to this call in the report for way more transparency.
Like forcing banks to value their assets at market prices, mark to market.
Exactly. Figure 17 apparently showed U.S. banks already had significant unrealized losses. The report suggests Europe's situation, based on figures 14, 15, and 16, could be even more precarious.
James Turk's point is interesting, too, that banks almost had no choice, given Fed policies.
Right, it adds another layer. It wasn't just bad management, maybe, but also the policy environment they were operating in.
And we can't forget commercial property lending, those rising office vacancies. Figure 18 showing San Francisco, Manhattan.
Yeah, another potential source of stress. If property values fall, loans go bad, banks get even more cautious about lending across the board. It all feels very interconnected.
It really does. Okay, so after all that economic gloom, the report pivots slightly to investment thoughts.
Just briefly, it notes that maybe short-term T-bills weren't looking as good anymore because the Fed was effectively printing money again with the bank rescue programs, figure 19.
So what did look good, according to the report?
The view is that we might get demand destruction, but with inflation continuing. So maybe shorter-term bonds were okay. Equities might go up nominally, but real returns after inflation could be disappointing, figure 20.
And alternatives.
Yeah. It reiterates the case for precious metals, maybe undervalued international stocks, the dogs of the world, as replacements for bonds when rates and inflation are high. And crude oil was flagged as potentially entering an attractive buying range based on commercial positioning in figure 21.
Okay. Then we shift gears dramatically to geopolitics. That Iran-Saudi deal brokered by China.
Yeah, the report frames this as potentially a huge deal, a tectonic shift, possibly signaling declining U.S. influence in the Middle East. It leans heavily on analysis from Ron Unz here.
Un's views can be pretty controversial, right?
They can be, yes. And the report includes his perspective that maybe U.S. arrogance or actions like the alleged Nord Stream pipeline sabotage helped push countries like Saudi Arabia towards China.
And the report notes how Western media seem to downplay this Iran-Saudi agreement.
Exactly. Like two major regional rivals making peace, brokered by China, and the reaction seemed kind of muted, according to the report. Secretary Blinken's comments are described as understated. Figures 22 and 23 really show you the geography involved.
Unz's comments on the Nord Stream reporting, or lack thereof in the mainstream, are pretty pointed, too.
Very pointed. He suggests, as cited in the report, a deliberate downplaying of an event that could seriously damage trust in U.S. alliances. The report mentions Seymour Hersh's reporting on it, which apparently got wide circulation online, even if major outlets ignored it.
So it highlights this potential gap between official narratives and what people might be seeing or believing elsewhere.
Right, and it all fits into this broader theme in the report of waning Western influence, rising international tensions, with countries like China and India playing bigger roles.
Okay, let's circle back then, as the author does, to that initial theme, the socialist threat revisited. How does SVB fit back into this?
Well, the report finds it noteworthy, maybe even ironic, that SVB apparently made significant donations to BLM-related groups and causes just before it collapsed.
That's ironic.
From the author's perspective, given their critique of some goals associated with these movements, it seems contradictory for a capitalist bank. And Hayek gets quoted again, linking social justice crusades to envy. It suggests the author is viewing these donations through that specific ideological lens.
It's definitely a provocative connection the report makes, and the observation about people from formerly socialist countries still being drawn to those ideas in the West.
Yeah, the report finds that puzzling. It challenges the idea that it's just about people not knowing the history or the failures.
Dan Mitchell's commentaries included, too, painting socialism in very stark terms.
Very stark, calls it immoral, failing, using Venezuela as the prime example. Quotes from Oppenheimer and Whiteman describe a really catastrophic decline there. Figure 24 apparently shows that economic collapse visually.
And the author was surprised the New York Times didn't mention socialism in an article about Venezuela.
Yes, perceiving that omission as potentially ideologically motivated, suggesting a reluctance in some media to name socialism as the cause of Venezuela's problems.
Which leads us into that deep dive within the deep dive. Fred Sheehan's essay on Bella Dodd. The author called this frightening.
Yeah, it's presented as a really disturbing historical account. Sheehan focuses on Bella Dodd, who was a major figure in the Communist Party USA, and her alleged role in a long-term strategy to infiltrate American public education.
Going back centuries, the desire to control kids' minds.
That's the claim, tracing it back 200 years. And the description of how Dodd was kicked out of the party in 1948. The report draws a direct line to modern cancel culture.
What were the steps described?
Accusations, twisting her words, disinformation, character attacks, even threats of violence. Sheehan argues it's a recognizable pattern.
And Dodd's background. Intelligent, exposed to social justice ideas early on.
Yes, even at her high school, which was apparently known as a communist hub way back in 1917, the essay then details the alleged infiltration of teachers' colleges, like Hunter College.
With professors like Sarah Parks pushing a specific agenda.
Right. Promoting what's called a materialist philosophy, discouraging traditional debate where you take a firm stand. Instead, pushing for this vague idea of just joining a progressive movement. Sheehan argues this undermines critical thinking and truth-seeking itself.
The anecdote about Parks criticizing Dodd for praising medieval monasteries while praising Marx, that's quite revealing of the alleged bias.
It is. And the essay highlights Dodd's organizational skills, which made her valuable to the party. Her belief that rights come from the government, not inherently, and her internationalist outlook are presented as core communist tenets.
She connects this to broader history. Marx, Engels, early communes.
Yes, and crucially, to figures like Horace Mann and John Dewey in American education. He argues their push for compulsory, state-funded, secular schools aligned perfectly with the goal of shaping minds from a young age. Lenin was apparently interested in Dewey's work.
Then the Frankfurt School comes in. Adorno, Marcuse, at Columbia University.
Right. Developing critical theory as, according to Sheehan, a kind of Marxist cover. The aim being to dismantle the cultural foundations of the West. This is where concepts like critical race theory supposedly have their roots.
And Dodd's involvement with teachers' unions, the AFT.
Deep involvement, according to the essay. It details the alleged strategic capture of the New York Teachers Union using tactics like packed meetings and floor fights methods Sheehan suggests are still used by activist groups today.
And summer schools indoctrinating teachers nationwide.
That's the claim reaching thousands of educators through programs at Teachers College in Columbia. The essay then really digs into what it sees as the destructive core of communism, citing Marx himself and perspectives from people like Frank Meyer on the different communist consciousness and Bernard Connolly on the Frankfurt School, aiming to make Western civilization stink.
It mentions the violence, too, referencing Richard Wurmbrand's experiences.
Briefly, yes, touching on the brutality of communist regimes. But the essay ends with Dodd's turn around her contrition, meeting Fulton Sheen, and her mission afterwards to warn people about communism.
And her FBI files being kept classified for so long.
Yeah, the report notes that, suggesting she might have exposed some very influential people, it's definitely presented as a chilling account.
Okay, phew, that's heavy. Let's shift completely now to the final piece. Daniel Dibala on agricultural commodities.
Yeah, a total change of pace, but fascinating in its own right. Dibala gives us a glimpse into the sheer complexity of farming and trading agricultural products.
He emphasizes the risks farmers face,
Right.
not just prices.
Oh yeah, government policies, currency fluctuations, weather, disease, energy costs. He even mentions the tragically high rates of farmer suicide, but he also talks about the sort of beauty and predictability of the seasons in farming.
So he walks us through the year, winter first.
Right. Dormancy, pest control, risks like frost, winter kill for wheat, how cold snaps affect meat production. He mentions specific storms and their impact. Also, how weather down in South America affects coffee and sugar, the softs.
And El Niño, La Niña, those big weather patterns.
He explains them clearly, how they shift rainfall globally, impacting crops everywhere, from South America to Australia to the U.S. Corn Belt to rice in Southeast Asia. Notes we just came off a triple La Niña, and Argentina was in a major drought because of it.
Spring is planting time.
Yep. Balancing timing against frost risk, the crucial spring rains, and the battle for acreage farmers deciding whether to plant corn or soybeans, watching that price ratio closely. Also, seasonal patterns in beef production, mentions tighter soybean stocks up north.
Summer sounds like peak stress time.
Definitely. High volatility, critical growth stages, rice heading, corn silking, soybean potting, everything hangs on the weather forecasts. Details the importance of sun and water for rice in China. Explains corn's vulnerability during that critical silking stage. Even a few bad days can slash yields. Mentions Ukraine's role as a major corn exporter.
And then autumn harvest.
Harvest time, variability in timing, focus on yield and quality, post-harvest prep. How the actual harvest numbers can cause big swings in options volatility as supply-demand gets reassessed. Mentions European harvests like wheat and rapeseed, and the year-round sugarcane harvest in the tropics.
He focuses specifically on cocoa, too.
Yeah, West Africa being dominant. The main harvest is during the dry season, and the Harmattan winds are a big factor. Stress, disease risk, transport issues. Notes how volatility often increases before and during harvest. And because production is so concentrated geographically, local problems can have huge market impacts.
And the war in Ukraine gets a specific mention, obviously.
Huge impact. He points to the massive volatility spike in corn, wheat, and soybeans back in Feb-March 2022 when the invasion happened. Really underscores Ukraine's role as a food basket for the world and the importance of that grain deal. Also notes China's reliance on the Black Sea region for food and fertilizer.
He also explains the futures curve,
Yeah.
contango and backwardation.
Yeah, positive and negative carry. How the price structure itself can influence trading. Gives examples, but warns it's not simple. You can't just short a market because it has negative carry. Tells a cautionary tale about losing big money doing that.
So the takeaway on agriculture.
It's incredibly complex, dynamic. Seasonality and weather are paramount. Crop failures can cause massive social problems. Government policy is a huge lever. He strongly advises against simplistic investments like just buying a broad commodity ETF, stressing the nuances of futures and options, and ends with a real appreciation for farmers and a warning about the hidden risks. Mentions the old Roman festival of Cerealia, tying it back to the ancient importance of grain.
Wow. Okay, so we've covered a lot of ground, pulling from that report and the essays. As we wrap up this deep dive, what are some of maybe the biggest threads for you, our listener?
Well, I think the interconnectedness really stands out, doesn't it?
Yeah.
How the report links economic jitters, these big ideological debates, and major geopolitical realignments. It's all tangled together.
Absolutely. And the identification of potential risks in the financial system may be obscured by accounting, possibly linked to past policies, the shifts in global power dynamics.
And that historical perspective on ideological battles, especially within education. Whether you agree with the analysis or not, it certainly raises questions about long-term cultural shifts and their origins.
Yeah. Hopefully, listening to this, you've had a moment or two where things clicked.
Yeah.
An aha moment, maybe.
Yeah.
Like seeing a potential parallel between historical tactics described in that essay and things you see online today.
Or even just understanding a bit more about why, say, global weather patterns discussed in the agriculture section might actually impact your grocery bill down the line.
Right. The goal really is that this helps you think more critically about the forces shaping things around us. How might this information connect to current events you're seeing, or maybe even financial decisions you're thinking about?
Just prompting that deeper consideration of the underlying currents. What are the long-term consequences of some of these trends and policies? That
Great.
feels like the crucial takeaway question.
Definitely. Yeah, and maybe one final thought to leave you with, something to chew on. In a world that feels like it's facing so many simultaneous challenges, economic, social, geopolitical account, how do we find the right balance between individual liberty and collective security?
And, maybe more importantly, who gets to decide where that line is drawn and how?
That's a big one, something to keep contemplating. Thanks so much for joining us for this deep dive.